You are listening to chartingwealth.com for Thursday, the 7th of July, 2016. We always start with IYY, which is a market index fund, an exchange-traded fund that tracks the entire U.S. stock market. What did we see happen after the Brexit vote? Well, that following Friday and Monday, the market went down sharply. We had a big down two-day candle reflecting those 2 days. Then we saw a green closed box candle with both wicks on the bottom and on the top. And we saw followed by an up movement. Though any of that solid green candle with those types of wicks tells us some indecision. The market did pop up. Well, it went ahead and followed that up with a green open box candle with a large wick on top. Followed again, these are all 2-day candles, by a red open box candle that was still around the same price area, followed again by the latest 2-day candle that we have underway, showing another green open box candle. Now, the market was down on Tuesday, up on Wednesday, and again, we were telling you the candle that we saw being drawn was showing indecision. Even though the market was down on Tuesday, we saw our derivative oscillator negatively, the negative derivative oscillator, losing energy, which means the market was pushing up as far as price movement went. We then had it followed by the new candle that we see being formed that will finish on the 7th. Well, that candle, in fact, shows a green open box candle with a large wick on top, a little wick on the bottom. So in other words, we're seeing price movement push up. We saw the derivative oscillator in the negative lose more energy. So again, the price movement going up. And we see on the 2-day chart, the MACD moving near the signal line. There is not a cross yet. So we do not call it a crossover with confirmed upward movement on our big chart, but we do see it moving that way. Now, here's the cautionary note for everyone who's listening. We've since broken our 2-day trend line. We do not need that anymore. What we need to look at, however, is we have movement that has stopped as far as our Hikinashi candlesticks goes on the total market at about 104.17 or so. Just over $104. It's been that way for the 3 candles that we see, the last 3 candles. What is that telling us? Well, it's the market's really finding a hard time getting above that, or at least for the last 5 going on 6 days now, moving above that. Will it clear that on Thursday? It may. If it does and it crosses over going up, that is a good sign. If it, however, does not do that and bounces down, then we may very well see the continuation of down movement. Now, if we go over and we look at our 4-hour chart, what do we see going on? Well, it's even more apparent. We look at where the market closed on the afternoon, on the morning of the 1st, and the afternoon of the 1st. That was this past Friday, the 1st of July, before the 4th of July Independence Day weekend in the U.S. We saw the market top out at about 104.80. It then moved down for 3 straight candles on the 4-hour chart, representing 1.5 days. That was all Monday and Tuesday, all Tuesday and Wednesday morning, and then it popped up Wednesday afternoon. Now that pop-up gave the market a rise of 0.63% for the day, and derivative oscillator still in the positive but losing energy, losing energy on the short chart, and the short chart does continue to move up, and it looks as if the MACD and the signal line are no closer to crossing over going down, but again, that up movement's still well below where it was on the 1st of July. So we want to see if it's actually doesn't have the energy to top over and starts moving down. We have 3 down red candles that showed us down movement that were broken in the afternoon, and that may be an anomaly. We want to pay attention. What's really giving us some warning could be, again, could be, this is a short chart, could be giving us a warning, is that we see the derivative oscillator continuing to lose energy. So pay attention to that. If we see a rollover that confirms the 1.5 days of red down candles, might be a good idea to jump back in. Some of you may have been experimenting. You may have jumped in after you saw the pullback occur. After the pullback ended, if you were just looking at Hinken Ashi candlesticks, and you may have been well advised to do that. We don't know yet. So again, pay attention. Let's watch and learn from what happens here. Has the market topped out? That is a good question. Let's continue to explore that. Wait until the charts tell us if it has. The charts have not told us that yet. Okay, and we pay attention to the charts. We don't go by hunches. We don't go by what we feel. We don't go by what we want to see. For the record, market was up 0.63%. Now, the S&P 500 is represented by SPY. Looks somewhat similar to the total market. Again, we have a stopping point on the upward movement around about 208.62, $208.62. Now, if we look at, and again, we're getting very close to a crossover going up on the big chart. Hasn't happened yet. Derivative oscillators continuing to lose energy. So we're paying attention to that, but we're also paying attention to the fact that we might have a ceiling. If that ceiling gets pushed through strongly on Thursday, it's not a ceiling. Okay, so let's pay attention to see what happens. Now let's look at our 4-hour chart. See what's been going on. Looks very similar to what happened in the total market. 3 down candles on the 5th. Market was down on the morning of the 6th and then up in the afternoon, 0.60%. We see, however, the derivative oscillators continuing to lose its speed. So pay attention. Pay attention. See how good our Hinken Ashi candlesticks are going to be to us. All right. We do have a pullback underway, but the pullback may be more than a pullback if it pulls the 2-day chart to a crossover. Keep that in mind. Again, we're always willing to let the charts guide us, not what our hunches are. The market will always fool you if you think you're going to do better than what the charts are telling you. What do we see going on the Qs? Well, our 2-day trend line has, of course, been crossed over the last 2 candles. Not by much. And again, we are in a confirmed up move. Still a confirmed down move. Don't have a crossover yet going up, although it's getting much closer, much closer on the Qs. We have 3 candlesticks that have been forming, actually 4 green, 3 open green so far. The first one just forming on the 6th. Again, up movement, but again, all petering out below where the down movement started before the Brexit. Is that going to be for us somewhere around on the Qs, the 107.77, something like that? Is that going to be a ceiling? Is the Brexit drop going to be where the market stops and then it rolls back over again? We don't know. Does appear to be getting close to a crossover going up. Derivative oscillators losing a lot of its energy. We're going to see a lot on Thursday potentially. Either it's going to pass through and continue to move up, or it may drop back over and give you a good entry point for perhaps a PSQ or a QID. The PSQ, of course, is the short. That is, it moves at a 1-to-1 ratio in the opposite of the QQQ. QID is a 2-to-1. It moves at twice the pace of the Qs inversely. It's what you call a leveraged inverse fund. So those might be something for you to experiment with in your virtual trades. Remember, we're not a stock calling service. We are an education firm. We want you to practice, learn to read the charts. Once you think you've gotten good at it and can continue to make successful trades, that's the time that you make your own decision about whether or not you want to put all of your knowledge to use and use your own money. We do not make those calls for you. So continue to watch to see if we get a crossover going up on the 2-day chart. When we look at what's going on the 4-hour chart on the Qs, we can see that the Qs has moved up to just about where the high was on the afternoon of July the 1st, this past Friday, after it started recovering from the Brexit move down. But if you notice, the market has not moved above where it started moving down on our Hinkin-Ashi candlesticks back on the 24th. So keep that in mind. Pay attention. Let's watch and see just what happens. All right, lastly, going to go back to our 2-day chart. For the record, the Qs was up 0.82% for the day on Wednesday. Now we're going to go to gold. Now, everything was up across the board, including gold. How interesting. Gold was up 0.59%. Typically, gold runs inverse to what's going on in the market, but it did not. Gold has continued to stream up. We have a nice, pretty decent trend line going up for 1, 2, 3, 4, 5 candles. Gold crossed over going up back on the 13th of June. Had a couple of down candles on the 21st and the 23rd. Again, these are 2-day candles. And then moved up since then. A little bit of indecision with a red open box candle on the 29th of June. So if we look at our 4-hour chart, what do we see going on? Well, we see that we had up movement in the morning on the 6th. And then we had some down movement in the afternoon. Again, where we see gold at this point, it crossed over going up on the 24th. Those of you who were able to find an entry point, perhaps after the pullback on the red down candles around the 28th, or again, that would have put you in sometime in the morning of the 29th, or again on the afternoon of the 29th, morning of the 30th, putting you in sometime around the afternoon of the 30th, you have done quite well watching this ride up. Do have a cautionary note at the end of the day. You had a red open box candle. Again, not showing strong down movement, but showing indecision. At the end of the day, gold nonetheless was up 0.59% for the day. You would have been doing well. There's been no crossover going down to actually find any kind of re-entry point since the pullback ended and it started moving up on the 24th. Again, a hard entry point there because of the huge push up in the morning after the Brexit vote. So that is where we are as we close the day. I know this has been a rather longer than usual review for the market, but we have some interesting things going on, and I want to try to share a little more with you as to what we were seeing in the charts today. Hope that this is helpful for you. Hope you are enjoying all of the information we're providing to you. We've been loading up a lot more training lately. I do encourage you to go to all the training that we offer. You can find it on SoundCloud. You can find it on our YouTube channel. You, of course, can find it at Charting Wealth. Really want you to look at the inverse ETFs, how to make money when markets crash training that we have. In addition to our Hinkin-Ashi candlestick training, those are the latest 2 that we've put out. We've been getting a lot of good comments from you on those. Hope that you enjoy them. Any other things you need, let us hear from you. We appreciate you. We're here for you, and we always love to hear from you. If you want to help us out, please go to YouTube and subscribe to our YouTube channel. Once we hit 1,000 subscriptions, we know many thousand listen every week, but once we hit that core subscriber base of 1,000, we can do some proprietary broadcasts directly to you. So it's in your interest to sign up or to subscribe to our YouTube channel. What also helps us a great deal is at iTunes. If you subscribe to our channel, that helps us out a great deal, and giving us a 5-star rating is also very helpful. We very much appreciate that. Thanks again so much. God bless you and your training. Hope it's going well for you. Let us know what we can do for you here at chartingwealth.com.